Hi everyone! In this video, we'll be taking a deep dive into NNN REIT. If you enjoy the content, please show your support by leaving a like and subscribing to the channel. And don't forget to drop a comment about which company you'd like me to analyze next. To make things easier, I've created a table summarizing the key information and financial metrics of the company. This will make the analysis more accessible, even for those who are new to investing. Disclaimer: this video does not constitute investment advice. Do not make decisions based solely on the content of this video. Always do your own research to determine whether a company aligns with your investment strategy and portfolio. Let's start with the basics. Full name: NNN REIT, Inc. Ticker: founded 1984. Headquarters: Orlando, Florida, United States. Market focus: automotive service, convenience stores, family entertainment. Portfolio overview: location of properties: United States. Occupancy rate: 99.3%. This is a crucial metric for REITs. If their properties are not leased or tenants fail to pay, it can create significant challenges for the company. A prime example of this is the struggles faced by Medical Properties Trust in recent times. Financial performance: revenue, $867.2 million. The company has shown stable revenue growth compared to previous years. Net operating income, $395.162 million. Again, we see steady growth. However, there hasn't been much change between 2023 and the most recent 12 months. Every company experiences occasional slower years, and later in this video, we'll uncover why 2024 turned out the way it did. Funds from operations, per share. This is another vital financial metric for REITs. While overall FFO growth is important, the per-share FFO must also increase. REITs regularly issue new shares, which can dilute returns. If you know why REITs issue shares, let me know in the comments. Or if you'd like a summary video about REITs, feel free to request one. Dividend yield: 6.11%. This is considered a high starting yield, even among REITs. While dividend growth is not dramatic, that's to be expected with such a high initial yield. The key takeaway is that they've managed to increase their dividend for 36 consecutive years, and their FFO payout ratio is well within safe limits. Debt metrics. Metrics such as net debt to EBITDA, net debt to capital, and interest coverage meet expectations, ensuring that the dividend appears sustainable. If you'd like a detailed breakdown of these financial metrics, let me know in the comments. Valuation. The expected price is estimated between $41 and $50, which, combined with the above metrics, suggests the stock might be undervalued. Growth and strategy. Acquisitions and dispositions. Invested $113.6 million in property acquisitions, achieving a 7.6% initial cash cap rate with an average lease term of 18 years. Sold 9 properties for $20 million, generating $7.8 million in gains at a cap rate of 4.4%. Long-term growth strategy. Focus on single-tenant net lease retail properties. Operate with a multi-year strategy aimed at improving per-share results. Maintain high occupancy rates and maximize the value of existing assets. Diversify the portfolio further. Grow through internal portfolio improvements and well-analyzed acquisitions. Use asset sales to manage risk and partially finance new investments. Preserve financial flexibility with conservative debt management. Target mid-single-digit growth in per-share results annually. Continue to produce safe and growing dividends, with 35 consecutive annual increases. Market conditions. In today's high inflation, high interest rate environment, it's essential to understand how these macroeconomic trends affect REITs and their stock prices. Inflation. While inflation can boost REIT revenues through higher rents and asset appreciation. Interest rates. Rising rates can increase debt costs and reduce investor demand for REIT shares. Diversified REITs like NNN, with long-term leases and stable tenants, are typically better positioned to navigate such challenges. Why didn't 2024 go well for NNN? As we discussed earlier, high interest rates negatively impact REITs. including NNN. This creates headwinds for growth and financial performance. The other reason for the significant drop in the stock price will be mentioned below. And while you're there, feel free to leave a comment about whether you found any useful information in the video. Why NNN might be a good buy for conservative investors. After the Federal Reserve announced a pause in rate hikes, possibly influenced by Trump's economic policies, NNN stock saw a sharp drop. I believe the market overreacted. Historically, it's been a good strategy to start accumulating such stocks 6 to 12 months before rate cuts. Additionally, the U.S. economy still has room to accommodate higher rates, which makes the Fed's decision a prudent one. Final thoughts? Thank you for joining me as we explored this company together. Every step we take toward understanding investments is a step closer to achieving financial freedom. Let me know in the comments if you learned something valuable. And don't forget to like and subscribe. See you next time.